be politically correct during this session. It's a pleasure for me to be in in this session on fuel price analysis. I continue because I have some message if I want to reject registration, but everything is there. Also, the first paper is from Francisco Teixeira, Raeder, and co-authors on asymmetric transmission of gasoline prices in Brazil. Also, Francisco, the floor is yours. You can show us your slide and have a presentation of 20 minutes. After this 20 minutes, we will have some discussion between all the members of this session.
Okay. Can I share the slides?
Yes.
Yeah.
Sure.
We're in presentation mode. And
excellent.
A pointer. So good afternoon, everyone. It's a pleasure to be here with you. My name is Francisco Raeder. I'm currently a PhD student in economics at Universidade Federal Fluminense and a researcher at Group of Energy and Regulation. The title of my presentation is Asymmetric Transmission of Gasoline Prices in Brazil, the Impact of the New Petrobras Strategy and the Influence of Ethanol Mandate. This presentation is a product of my master thesis, and I'm still working on a final version of the article that I'm writing with my co-advisors, co-authors that are my advisors, Professor Niágara Rodrigues and Professor Luciano. So suggestions and comments are welcome. The Brazilian gasoline market is composed by four main activities: refinery, distribution, resale, and production of ethanol. In refinery, we have Petrobras, which is a state-owned oil company, and it has more than 98% of the Brazilian refining capacity. And in terms of gasoline, the main product of refineries is gasoline A, which is pure gasoline. Then we have distribution. In distribution, there are 131 firms in the sector, but the three biggest companies, they have more than 60% of market share. Included on those 60%, we have a Petrobras subsidiary. And also in distribution, there is a particularity in the Brazilian case. Due to an ethanol addition mandate, there is a mixture composed by 73% of gasoline A that comes from refinery and 27% of anhydrous ethanol that comes from production of ethanol. This mixture is the gasoline C that goes to resale. The resale in Brazil is the less concentrated sector. We have more than 40,000 gas stations in Brazil, and more than 43% of them are independent, which means they are not associated with any distributor. And finally, the final consumers, we have another particularity. In Brazil, our fleet is flex fuel. So consumers can choose at the moment they are filling up their tanks if they want to buy gasoline C or hydrated ethanol. Both fuels are substitutes in Brazil. So as I said, Petrobras is the main agent in the Brazilian industry of gasoline and fuels. So its pricing strategy is very relevant for all other activities until final consumers. Here in the graphic, in light blue is the price of gasoline in resale. In light gray is the price of gasoline in distribution. In dark gray, the gasoline in refinery. And in dark blue, the price of anhydrous ethanol. It's interesting to look at the price in refinery, which price strategy is defined by Petrobras. Between 2004 and 2015, we have stability in prices. However, in 2016, Petrobras changed its pricing strategy and adopted a short-term international alignment. So contrasting with the previous stability, from 2016 on, Brazilian prices in refinery follow the international market, so volatility is now present. And furthermore, the Brazilian currency, the real, had devaluated in front of dollar, so besides volatility, we still have increasing prices. So after the price formation in refinery, we have to understand how the readjustments are transmitted through all other activities. And the second graph, we have the readjustment, which are the first difference in price series. In blue, we have the price in resale, and in gray, the price in refinery. We can observe two patterns, the one in stability and the one after the international alignment in the short term. And we also can see that the readjustments do not match perfectly. So there are some indicative of asymmetry in price transmission. But what is asymmetry in price transmission? We have asymmetry price transmission when there are differences in magnitude and or speed between negative and positive price adjustments in retail. In this case, we can think about gas stations resale, and when price changes in the wholesale, refinery or distribution in this case. Generally, we have the feather and rocket effects, but what is that? There's a tendency that price goes up like a rocket and goes down like a feather. This graphic, those three graphics are examples of the feather effect. For example, the feather effect of magnitude, the price in the wholesale or in refinery goes down into one, and also into one, the price in gas station goes down, but not completely. That gray area is the asymmetry. Normally, the price would follow that pointed line, but it goes to that full line. The asymmetry of speed happens if the price goes down in refinery in T1, but the price response in retail only happens in T2. So there's a lag between the response. That gray area is also the asymmetry. And finally, we can have a combination of magnitude and speed. Price goes down refinery in T1, but it takes more than 1, 2, 3 weeks for the price to go down in resale, and it not goes completely. And those asymmetrical transmissions have some consequences for welfare. They cause this distributive distortion. Why? Because sometimes consumers pay immediately for higher prices, and sometimes they do not take advantage of price reductions. So when the situation happens, feather and the rocket effects, we have situations that are not Pareto efficient. What causes asymmetry in price transmission? The economic literature points out that imperfect competition is the main cause of asymmetry in price transmission. And there are several approaches for that, such as market power, collusion, profitability, margins, and search costs. As we see, the Brazilian gasoline market is subject to asymmetries because we have a monopoly in refinery and a very concentrated market in distribution. However, besides the imperfect competition, we have some Brazilian particularities that may cause asymmetry as well. The first one is the ethanol addition mandate. This map shows the production of ethanol in Brazil. Each point is a point of production. But we have the São Paulo state here in red is responsible for more than half national product of ethanol. So there are transportation costs, and the gasoline is more expensive in regions that are far from the production center. We also have a production center in the Northeast region, but São Paulo state is the main production center in Brazil. We also have the taxation. In Brazil, there is a tax called ICMS, which is a tax on circulation of products and service, which rate is defined by each one of the 26 Brazilian states. And there are differences among the states. For example, in São Paulo, the ICMS rate is 25% on gasoline. In Rio de Janeiro state, it's more than 32%. So there are significant differences between states which may cause asymmetries. So our work aims at verifying the presence of asymmetries in price transmission between refinery, ethanol, and distribution, and also between distribution and resale. And we analyze the asymmetry transmission in 2 periods. We consider the period of stability from 2004 to 2015, and the period of short-term international alignment from 2016 to 2019. Due to the pandemic, we excluded the 2020 year of our analysis because prices were not following a pattern due to restrictions and everyone else. And we make our analysis for the 5 Brazilian regions, which are North, Northeast, South, Southeast, and Midwest. And from the objective, 3 research questions have arisen. The first one, does Petrobras pricing strategy change the dynamic of price transmission? 2, does the ethanol mandate influence asymmetries? And 3, how much do consumers lose because of asymmetries? As a method, the first step is to estimate the long-run relationships between the variables. And we consider that the pricing distribution depends on prices on refinery and the prices of ethanol. And the prices on resale depends on price on distribution. For the long-run relationships, we use the dynamic cardinality square by Stokkan-Walton estimator because it's efficient and asymptotically consistent for co-integrated series, which is that case. And from the long-run relationship equation, we use error correction models to test for asymmetries. The error correction models is the main methodology used for that kind of research. And it consists in adding the first difference in all variables to add past change in price in the model and to decompose all variables in positive and negative ones. And this term, the ECM, is the error correction model term. That is the lagged residual from equation 1 and 2, the long-run relationship residual. And with 3 and 4, we take some hypothesis tests. We test for instantaneous asymmetry of magnitude. We test for short-term asymmetry of magnitude and asymmetry of speed. Instantaneous asymmetry of magnitude, we compare the beta zeros of both equations. In terms of short-term asymmetry, we compare the sum of betas, the positive and negative one. And in terms of speed, we compare those lambdas that is related to the error correction term. It's the asymmetry of speed because the error correction term measures how fast the series goes back to its trajectory of long-term equilibrium. If we reject this hypothesis, we have detected asymmetry in price transmission. We also estimate the consumer cost, and for that, we use 2 cumulative response functions, one positive and other negative. These costs estimated from the shock, from 1% shock in distribution to resale. But specifically in this case, we consider the Brazilian average price and not price in regions. And each cumulative response function is composed by 4 terms. The cumulative effect to the previous period, the current impact of a shock, the dynamic effect of price changes, and the effect of being out of the longer-term equilibrium. This beta 1 is the beta from the long-run equation. And if we take the difference between the positive and the negative curve, we have the consumer costs. And finally, the results. This table shows the results of the test of hypothesis. And if you find a yes, it means we detected asymmetries in that case. If there's a no, we could not find any indicative of asymmetry. As you can see, all regions and all periods have at least one kind of asymmetry. But we highlight that after the adoption of the new Petrobras strategy in refineries, we have a decrease in the number of magnitude asymmetries in refinery, both instantaneous and short term. However, after the adoption of the new Petrobras pricing strategy, there are new magnitude asymmetries in ethanol, both instantaneous and short term. And in terms of asymmetry speed, we have a decrease in the number. And it's important to highlight that we found a pattern that rocket effect in magnitude and the feather effect in speed. So price goes up instantaneously and more than it should go, and price goes down slowly with a lag. And then the results between distribution and resale. Here we have a particular case that is the North region. It's the only one in our analysis that we could not find any evidence of asymmetric price transmission. And it's after the adoption of the new Petrobras strategy. And compare the period before and after the adoption of the new Petrobras pricing strategy, we see that the number of centennials asymmetry of magnitude remains the same. So there's no difference for transmission between distribution and resale, but there are some difference from short-term magnitude symmetries and asymmetries of speed. We have an increase in the number of short-term magnitude symmetries and a decrease in the number of asymmetries of speed. And the same case as the previous slide, we have detected the rocket effect in magnitude and the feather effect in speed. And finally, the consumer cost and the loss of welfare. This graphic shows the result of the cumulative response functions before and after the adoption of new Petrobras pricing strategy. And as you can see, at the moment of the shock and 1 week later, we could not see any difference between Petrobras pricing strategy. However, 2 weeks after the shock, the consumer cost decreased after the international alignment in the short term and remains stable when prices were stable. And using those numbers, we could create a scenario taking some assumptions. We suppose that a driver drives 15,000 kilometers in a year, and this driver has a car that has a full consumption of 1 liter of gasoline per 10 kilometers. And we suppose that gasoline price is R$4.08. Thus, the weekly expenditure in gasoline is R$138.24. As you can see, the monetary loss after the new Petrobras pricing strategy reduced to 19%. In the previous period, consumers lost R$2.57 due to asymmetry, and now they lose R$2.07. So conclusions, we conclude that the price transmission process in all Brazilian regions is asymmetric. The only exception is the North region, from distribution to resale, in the second period characterized by international alignment in the short term. We also conclude that both Petrobras pricing strategy and the ethanol addition mandate do influence the price transmission dynamics. And the short-term international alignment proved to be better for consumers in terms of reduction of asymmetry and in terms of welfare. However, the volatility is still an issue for consumers. I don't know if you heard about that, but in 2018, the Brazilian truck drivers went on strike because they were dissatisfied with the volatility at the pump. So it's still an issue that needs to be further discussed. But here, the discussion is how to mitigate the asymmetry as the main objective of this work. One possible solution is transparency. In some countries like Germany, South Korea, and Chile, transparency helped in reducing asymmetries. In Germany, it reduced the rocket and effect phenomenon. Sorry, the rocket and the feather effect. In Chile, it helped the regulator to detect collusion. And in South Korea, it stimulated even more the competition. So Brazilian could disclose its prices well in real time using apps for smartphones, following the example of these countries. And it could be a solution for the Brazilian asymmetry. Although the asymmetry had decreased in the second period, we still have asymmetry, so we still have space to discuss regulatory tools to mitigate the phenomenon. And that's it. Thank you for attention. Any comments, doubts are welcome.
Thank you, Francisco, for your presentation, which is very interesting. I guess that's the best. If you have some question, do a sign and then open your microphone to ask your question for Francisco. I don't know if someone.
A question from Michael.
Yes. So do I have the floor?
Yes.
Okay. Okay. Thank you. Thanks, Francisco, for your wonderful presentation about the asymmetric the transmission mechanism in Brazil. I would like to ask you some questions. And the first one is did you try to did you try to disentangle the asymmetric pricing mechanism by incorporating other variables than the ones that you have used? For example, the exchange rate or the structural characteristics of the market, since you have, as far as I understood, a non-competitive industry in Brazil regarding fuel pricing. Maybe you could use some indicators like Lerner index or Hirschman-Herfindahl index that do account the market concentration. This is the first question. And the second one is about the methods, the econometric methods that you have used. I think that you have relied on the dynamic OLS by Stock and Watson back in 1993. Since then, we have many other econometric models that do account for asymmetric pricing. Did you try to estimate a non-parametric model, let's say? This is an idea for some further extension of your model to see if there are non-linearities, not only linear relations, but we might have some non-linearities. So a non-parametric model or a threshold model maybe is useful to your analysis to see if also these non-linearities do exist or not. I don't know. But maybe it could be a good idea to further check your results by employing these more, let's say, sophisticated methods, except for the dynamic OLS. Otherwise, I have no other questions. It was a wonderful presentation, and I have learned a lot about the Brazilian oil industry. Thanks.
Thanks for your comments, Michael, including I discovered the Dawes estimator in your work. I think it's 2014, if I'm not wrong.
Yes, yes.
Yes.
It's one of my previous works, yes, about the asymmetric pricing.
I use it a lot for my master thesis. Helped me a lot in your work. As I said, this presentation is based on my master thesis, and I'm still working on a new version of the article, and I may consider other kinds of variables and other econometric tools. And I'm still researching this topic in my PhD, which I'm currently a student. So your suggestions are very good. I may include some new variables on the new studies and try another econometric tools. And about your first question in my master thesis, I used the exchange rate, but the results were not so good. So I did not consider for this presentation and for the article I'm working on it right now. But thanks for suggestions. I'll definitely use new variables and try new econometric tools on my research.
Thank you for these comments. In the same way as Michael, in fact, I work with some Brazilian colleagues on the oil refining industry. But we work together with optimization model in order to see what was impressive in Brazil is a strong decrease of the rate of use of the refineries, which explains that they were obliged to change their strategy. In fact, if you run econometric model with some structural break test, you will find the structural change that you found. I guess. I think that you will find them. But yes, you have done something which is very interesting and which makes sense. In fact, I work, and I understand why my friends asked me to be in this session today, because I know that I work on the Brazilian oil industry, and there was so much changes in this industry with the development of the pre-salt, and we do not have any, but perhaps you have some strong ideas on the value of the national crude, which is processed in the refineries, which will explain the changes in the strategies.
Perhaps you're right, there are many changes in, I'm sorry.
Yeah, it's an explanation of your results. I guess that in 20 minutes it's not of use, but certainly in your PhD, you will have time to explain all the elements of what happened. Is it useful to have biofuel in the north, in Amazon? Does it make sense?
I'm sorry.
North of Brazil. Does it make sense to have biofuel, which is mandatory in the north of Brazil, from your point of view?
In thesis, thinking of environmental question, yes, it's useful. Yeah. However, if you think in terms of costs, the biofuels in the North region, the Amazon region, is very costly to consumers. So there is a trade-off between higher prices and sustainability. So
yes,
I don't know which one is better.
Yeah, it's not obvious question. Also, thank you, Francisco. I don't know if
thank you.
There are some other questions. If not, also thank you, Francisco. And now, the second one is Michael, who is going to present his results for 20 minutes.
Okay, thanks a lot. I will try not to exceed my time limit, so I will try to explain, to give my presentation within the time limit of 20 minutes. So I will now share my screen. Yes, I think that you can see
excellent.
Now
yes,
presentation. Okay. Okay, so let's start. This is a joint paper, a joint work prepared by Professor George Deltas from the University of Urbana at Champaign in the US, and me. I am Michael Polemis. I'm an associate professor in the University of Piraeus in Greece. And my interests are related to the asymmetric pricing mechanism. So this is the paper that I am going to present to you. The paper tries to link two sources of asymmetries. We have the exchange rate pass-through, ERPT, and the fuel pricing asymmetry. But first of all, let me start by presenting most of the basic papers that are related to the literature of the asymmetric gasoline pricing mechanism. So there are hundreds of papers that investigate the response not only of retail gasoline prices to changes in the upstream input prices, but the wholesale also gasoline pricing asymmetry. So the relevant literature is very broad, and there are many sources that justify the asymmetric transmission mechanism. You can see here some of the most common used, let's say, explanations behind the asymmetric pricing phenomenon known as Rockets and Feathers hypothesis. So most of the explanations are related to the search theory, to the dynamic competition, to pricing itself, to pass through, including from foreign exchange and tax pass through to the gasoline prices. And some of these explanations are linked also with other parameters, such as inflation dynamics or the level of competition in the gasoline industry. And of course, tacit collusion or significant market power are the most obvious reasons that justify this asymmetric pricing mechanism. And of course, there are other theories that try to link information and consumer demand. Okay, so most of the literature impacts several fields in the economic theory, including as well, not only IO, but also macroeconomics and applied econometrics. So the studies span more than 30 years, and the studies include many countries or many group of countries like the EU, like OECD or the US. And of course, all the studies are very heterogeneous in the research design. Some of the studies use data at various levels of spatial aggregation. Other studies cover periods of less than 1 year, and other studies cover time periods that are longer than a decade. And of course, the range in frequency lies from less than 1 day to a month. And many other studies include not only pre-tax prices, net pricing, but they also include the gasoline prices after the imposition of taxation. Most of them employ econometric methods. And the most common econometric methods that they use are related to distributed lag models and to error correction models like the one that we have seen in the previous presentation. Okay, so what about the motivation? What about the reasons behind the existence of the rockets and feathers hypothesis? So there are, one reason is market heterogeneity. There are markets that are different in terms of relevant characteristics. There are many gasoline industries that have a high degree of competitiveness. And of course, there are other industries that are characterized by a low degree of competitiveness. So market heterogeneity is one of the 3 main possible reasons for these heterogeneous results, since the economists do not have a clear consensus about the existence or not existence of this phenomenon. Another possible reason is time heterogeneity. Some recent studies are less likely to find asymmetries. And of course, the third reason is related to the research design heterogeneity. We have some papers that they use different data frequency, or they use different spatial aggregation. We might have studies that are related to one country or a group of countries or some geographic regions. And of course, we might have some studies about the rockets and feathers hypothesis that investigate price definition. Okay, so the key research questions about this study are related to, you can see here in the slide, what is the extremely important issue for the economists to study all these asymmetric gasoline pricing mechanisms? So if we want to know the possible sources of this asymmetric gasoline pricing mechanism, then we might have the opportunity to assess how much heterogeneity there is in the price process across countries and across time. Or we do want to know the mechanism behind the rockets and feather hypothesis, since in this case we might be able to conduct accurate comparison across studies. So in order to see all these research questions, we want to use the same benchmark. We have to fix the type and amount of data, and we we can vary the research design in all these studies. So this paper is related to the, mostly related with macroeconomic issues, since the adjustment gasoline speed is linked with price differentials, price differentiation, like inflation and consumer price index, the performance of consumer price index to various shocks generated from demand or from supply side. So many studies have looked at a broad range the pricing mechanism by using the lens of macroeconomic theory generally. And you can see here in this slide some related papers that try to link macroeconomic variables such as the exchange rate pass-through, like this study, with the gasoline pricing mechanism. So what about the contribution of this related study? In this paper, we have used a unique parent data set to measure the variability not only of the pass-through estimates, but also we have measured the asymmetries by themselves. Okay. And by making all these, by using all these econometric techniques, we have identified the linkages between these estimates in terms of the data configuration, the estimation window, or the econometric techniques and the specification of these studies. Our third contribution is that we have tried to relate the price pass-through rates to demand and supply side explanations. So more on this in the next slides. Now let me briefly give you a description of the data that we have used in the study. We have used variables such as the retail gasoline price. This variable consists of weekly country observations in the European Union for each country in the EU 28 from 1994 to 2015. We have used not only the taxes before the prices, before the imposition of taxation, but we have also used the final prices, the pump prices, after the imposition of taxation for robustness purposes. The main source of the data is the weekly oil bulletin published by the European Commission. So in the retail segment, we have used two variables, the pre-tax gasoline pricing and the after-tax gasoline pricing. Back in the previous segment, in the upstream segment, we have used some price markers like the one that you can see here, the Rotterdam price, or the ARA price. It's one of the two commonly most used upstream price markers in the European Union. We have Rotterdam price and we have the Mediterranean price for the European Union, for the countries of the European Union that are back in the Southeast, let's say Europe. We have also used the New York gasoline price, and all these are daily observations. And we have obtained all this data from Platts and the US Energy Information Administration. All price series were in nominal values, and all these prices were converted to euro. So we wanted to have a common currency between all these heterogeneous member states of the European Union, since some of the sample countries have euros, have the common currency, and other countries in the European Union, they don't have implemented the common currency. Okay, so let's move on with the empirical framework. we have used two simple econometric models. The first one, as you can see here, is the autoregressive distributed lag model, or ARDL. You can see that we have the retail gasoline pricing regressed on the wholesale gasoline pricing and to a matrix consisting of monthly or country dummies. This is the first estimation technique that we have used in the paper, the first model, econometric model. Apart from the ARDL, we have also used the error correction model, which is a simple ARDL model plus the error correction term, as you can see here. Okay, this is the error correction term and is lagged once to denote the speed of adjustment. Okay, and these equations have been estimated either as a panel, so we have used panel data techniques, or we have used time series analysis. We have estimated, we have performed all these equations. We have used 28 equations for each member state of our sample. The above models were also estimated not only in first differences, as you can see here in the slide, but they have been estimated in levels. The time period is 1994 to 2015. The sample countries are all the EU 28 countries, including the United Kingdom, since we didn't have a Brexit here, since the sample stops at 2015. It's an unbalanced panel data set consisting of pre-tax retail gasoline prices and after-tax retail gasoline prices. We use the full data set. And of course, we have used not only the two main variables, the gasoline, the retail pricing variable and the wholesale pricing variable, but we have also used the exchange rates, since we wanted to have an explanation if the exchange rate pass-through is more abrupt or not to the gasoline price mechanism. That's why we have used the weekly exchange rates. And we have also used certain macroeconomic time series variables. And we have also used some variables that are related to the, let's say, a proxy for consumer search. And these variables were drawn simple by the Google search. Okay, we have used the Google Trends to quantify the effects of information on the two main variables, the exchange rate pass-through and the pass-through and the price pass-through. So what about the main results of our models? We have noticed that there is a significant difference between the exchange rate pass-through and the price pass-through, especially in the first few weeks. The results of the model are reported here in table 1. Here is the retail price elasticity with respect to changes in the world oil price and the exchange rate. So we have isolated the retail pricing mechanism from the exchange rate pass-through. And as you can see here, the results are in alignment with the Rockets and Feathers hypothesis, indicating that there is an explanation, that there is a different gasoline pricing structure between the exchange rate pass-through and the retail pass-through. The same pattern holds here if we are looking about the impulse responses function that are generated from the error correction model and the distributed lag model. You can see that there is a convergence between the exchange rate pass-through and gasoline price pass-through, but there is also a difference in the magnitude and in the speed between the two main gasoline pricing mechanisms. So the IRFs, the impulse response functions that were generated by the estimation of the error correction model indicate that the pass-through to exchange rate shocks is not in the same pace, but is slower and smaller in its magnitude. The difference is statistically significant nearly in most of the weeks, but the statistical significance is more evident using the error correction model. And the elasticity response gap between the two series in the early stages in the 3 or 4 weeks is rather small, but grows to almost 0.1 for the rest of the period, for the 2nd to 5th weeks. So the exchange rate pass-through driven cost changes is slower than pass-through to changes in the world price. So this is the main finding of the paper. There is a different pattern between the two main variables in the model. The exchange rate pass-through has a rather slow adjustment compared to the price pass-through in terms of the world oil price fluctuations. And of course, if we try to investigate, we try to estimate, we try to conduct a country-by-country analysis, the results are more or less the same with the panel data that we have seen before. So I'm not going to spend more time on the country-by-country averages, but let's move on to the possible reasons behind these discrepancies. We have tried to investigate the supply side explanations, and we have incorporated some non-linearities in our model. This is related to the comment that I have used before to Francisco. We have used a threshold response model to calculate if there are some thresholds, if there are some non-linearities like menu costs or oligopolistic interaction, or some explanations like the King demand curve that justify non-linearities between the pricing mechanism. And we have seen here that there is not such evidence. So the second parameter generated from the supply side explanation is the Euro-specific factors. In this slide, we have tried to see if the Euro adoption affects global demand and drives the gasoline pricing mechanism. For this reason, we have re-estimated our model, and here are the results of the two models. I mean the error correction model by splitting the sample to the Euro member states and to the non-Euro member states to see if there are some differences that justify this differential. Again, the differences are minor, so this is not the exact explanation behind the slower adjustment of the ERPT compared to the price pass-through in terms of the world oil prices. Another supply-side explanation might be the differential persistence of shocks, since firms in the oil industry are less likely to respond to an input price cost change that will likely reverse within a week or 2 weeks. So we have tried to investigate if there is such explanation to the model, but again, we have seen some limited piece of evidence that the slower response of retail prices to exchange rates is driven by expectations that these rates will again go back, will revert to the original values. And of course, these are some other explanations, supply-side explanations, that are related to the contractual factors. If there are some differences in terms of refining pricing, in terms of the contractual factors that are behind the rockets and feather hypothesis. We have seen here again that there is no evidence that the slower exchange rate pass-through is driven by the retailer cost side. So since we have ruled out all or some of the most common supply side explanations, we have tried to link the demand side explanations behind this discrepancy, behind the ERPT and the gasoline price pass-through to changes to world oil price. The first here explanation is the currency fluctuations and growth. We have tried to see if a currency depreciation or a currency appreciation is associated or not with a weaker or a strong growth for the EU. So in order to cover this parameter, we have estimated the model that you can see here in the slide. We have used the country's trade ratio for the preceding year. So we have incorporated the imports and the exports activity of all the 28 member states to see if these fluctuations are driven from some differences in that are related to the terms of trade behind the trade flows of the EU member states. We have used all these equations to see if there is a difference in the basic notion of the paper, but we have seen here that there are some differences that justify this discrepancy. The estimated response in the logged regressions, these are the top panels. At the top panels, we have the logged estimations, and at the bottom panels, we have the estimated models expressed in levels. So the differences, there are some differences that appear to explain all these fluctuations. The differences between low and high exposure countries, this means that we have net exporters or net importer countries within the European Union, probably is one of the explanations behind the existence of the rockets and feathers hypothesis. Another demand-side explanation is related to the consumer search and local market competition. We have based to these fundamental papers by Lewis 2011 and Lewis and Marvell 2011 to see if there is an increasing role of information towards the gasoline asymmetric price adjustment. And for this reason, we have used the Google Trends. These are data that are freely available from the web. And we have searched through the Google Trends these two basic terms. The first term is oil price, corresponding to the price pass-through, and the exchange rate. This variable is a proxy for the exchange rate pass-through for all the sample countries. As you can see here from the graph generated by from the Google Trends, you can see that the red curve represents the term of the oil price, and the blue one represents the exchange rate. As you can see, in most of the sample countries, and generally speaking, all over the world, the oil price term is always greater in Google search engine compared to the exchange rate. So this might be a possible explanation behind the differentiation, the variation between the exchange rate pass-through and gasoline price pass-through. Last, we have used also the asymmetric responses. We have relied to some of the fundamental papers of the rockets and feathers hypothesis. These are previous work by Bacon back in 1991 and Karenbrock in the same year. So we have estimated the possible asymmetries to see if there is some explanation and if these asymmetries were small or large and drive our results. The asymmetries do not contribute towards the pass-through differences that we have observed in our sample. And this is the conclusion of the paper, which is still in the working process. Transmission of input price shocks in gasoline seems to be faster when it is driven by changes in the world oil price of gasoline than by changes in a country's exchange rate. So it is true that exchange rate pass-through is smaller, has a smaller impact on the rockets and feathers hypothesis than the price pass-through mechanism. The demand side factors are the most likely explanation, and especially the consumer search and the role of information in the explanation of the rockets and feathers hypothesis. The relatively smaller range of the exchange rate pass-through may also be a contributing factor. And last but not least, there may not always be a unique pass-through rate to cost increases. So a policy implication, or let's say an avenue for future research, is to guide the researchers to try to find out not only one possible reason behind the rockets and feathers hypothesis, either this could be a search cost or could be the role of inventories, the role of market power, but to always to look at many possible reasons driven by the demand side fluctuations to explain in details the rockets and feathers hypothesis. And this is the end of my presentation. I tried not to exceed the 20-25 minutes, and I am all ears to hear questions from the audience.
Thank you, Michael, for your presentation, which is very interesting. I'm sure that there are several questions. I don't know who wants to ask the first one. Can
I ask a question?
Start? Yeah.
Thanks for your presentation. It was very good and very interesting. Many new explanations for asymmetries besides the Rockefeller effect and the feather effects. So my question is the following. Shocks in price tend to be transmitted more rapidly in terms of gasoline prices and not so rapidly in terms of the exchange rate. Do you know why that happens? Why the exchange rate does not have a stronger influence as price pass-through have?
Thank you, Francisco. Yes, there are many possible explanations for this, let's say, a different pace between the exchange rate pass-through and gasoline price pass-through. One of these explanations might be is related to some macroeconomic variables of the sample countries. As you might remember that we have used an indicator, trade indicator, and we have tried to estimate this indicator by dividing imports and exports. So the export profile or the import profile of the sample countries, which might be different, as you can see. In the US, we have net exporters, we have net importers. So this is one of the many explanations behind this slower adjustment of the exchange rate pass-through. Other explanations are related to the markets themselves. I mean, the level of competition, the level, some structural characteristics of the markets that justify this slower exchange rate pass-through. But the basic point here is that the difference in the export activity or the import activity between the countries within a union, this is the European Union in our case, might justify that we have a slower pace drawn from the exchange rate pass-through compared to the gasoline price pass-through. This is one of the most obvious explanations behind the difference of the two driving forces in the rockets and feathers hypothesis. But this is a general conclusion that many papers acknowledge, most of the papers that are related to the rockets and feathers hypothesis are trying to encapsulate, to use the exchange rate pass-through as, let's say, one of the variables that justify the existence of the price pass-through. So most of the studies have a clear consensus about the difference, the slower adjustment of the ERPT. And in the paper, I have used many other related studies, not from the gasoline and the rockets and feathers hypothesis, but some papers, macroeconomic papers, that try to disentangle and to justify the existence of the ERPT and the basic causes of the ERPT. But you are right, yes.
And have you published this article yet?
Excuse me, I couldn't hear you.
Have you published this article yet?
No, we haven't published the paper.
Okay.
This is under review. It's in the under review process, and we do hope that the paper might be published. And with your comments, I think that the paper might be published in a good journal, let's say. Let's hope. Fingers crossed.
Very interesting
Everybody.
paper. Congratulations.
Thanks, Francisco. Thanks a lot.
To be in the same way of your answer, as far as I know, in fact, for the European refiners, we could say that 1/2 of their contract for oil product deliveries within the European Union are in US dollar and 1/2 in euros, in fact. And to go in the same way as you have been for your explanation, all the traders are hedging for future movement of oil price and future movement of the exchange rate. It's easiest to anticipate the movement of the exchange rate, which follows macroeconomic fluctuation, and generally you do not have very large surprises. For the oil market, it's not the same. I think that contribute to your explanation when you say that we have more reaction with the oil market than with the exchange rate.
Yes, actually you are correct. Yes, there are very different mechanisms, since gasoline and oil products are commodity markets that are driven mostly by the world oil price fluctuations in terms of the ERPT, since the exchange rate pass-through mechanism includes many other factors, not only the fluctuations behind the oil pricing. So this is also one, your discussion also contributes to the basic notion of the paper, which is the difference behind these two mechanisms in terms of exchange rate and, of course, in terms of oil pricing.
There is a question from Bruno, if you want to take the mic.
Yes, thank you. I may have lost the information in your presentation, but what was exactly the reference for the international gas fuel price? What is the region? It was gasoline in the US Gulf Coast, for example, or in Rotterdam, Netherlands?
Yes, Bruno, thank you for your question. We have used two upstream price markers. We have used the ARA price, ARA, Amsterdam, Rotterdam, Antwerp price, and we have also used the New York price, which is also a good, let's say, proxy for wholesale price fluctuations. These were the two basic price markers for the upstream market, for the wholesale market.
Okay.
And of course, we could use the Mediterranean pricing. To see, since we are talking about the European Union countries, we might also use the Mediterranean, the high or low FOB or CIF Platts price for Mediterranean. Since here in Greece, the basic, or I think that this is also in France and in Italy also, the indicator of the wholesale pricing is the Mediterranean price, not the Rotterdam price.
Okay, I made this question because maybe the European prices, reference prices for gasoline, may be correlated with the exchange rates between euro and dollar, and this makes the relationship between exchange rates and pass-through lesser than the relationship between international prices and domestic retail prices. So the effects are maybe larger if you have considered only the New York price, for example. You're mute.
Michael,
Yes, sorry,
yeah.
yes. I switched on my microphone. The basic idea was to use only the New York pricing wholesale market. But since we have European Union countries, we have tried to use the ARA price, the ARA price, to see if there are some differences. And you are correct about the possible correlation, but we have also correlation between the New York gas pricing and the Rotterdam gas pricing. So as you can see, all these gasoline pricing are also correlated with each other. That's why that's why we have tried to isolate the Euro member states from the sample and the non-Euro member states to see if something is changing. But the estimations were not satisfactory to explain some possible differences. So that's why we have also used two gas pricing markers to see if the results are robust or not. And from the analysis, from the econometric results, we have seen that we didn't have some differentiation between the two wholesale gasoline pricing markers.
Okay, is there an other question for Michael? No. Also, perhaps you can continue the discussion later on with each of us. Also, the next speaker now is Bruno on recent social upheaval against the fuel price increases. Now, Bruno, the floor is yours for 20 minutes.
Thank you, Frederic. Let me share my slides. Okay. Hello, everyone. It's a pleasure for me to present this article that I wrote together with my colleague Luis Esteves about social upheavals occurred recently against fuel price increases in diverse countries. Although both of us work in the Brazilian oil sector regulatory body, this article doesn't express the view of the institution on the theme, but ours instead. These are the topics I planned to go through today. Well, between 2017 and 2019, spikes in motor fuel prices originated social upheavals in democratic nations, revealing a further hindrance to proceed with energy policies related to rather phasing out fuel subsidies or scaling up carbon taxes. 5 countries with diverse backgrounds were selected as examples of social upheavals triggered by motor fuels price spikes, to some extent related to political decisions made by local governments or their controlled companies. To put into context, here's an oil price chart in the enlarged period from 2003 to the present, and we can see a lot of volatility with nominal prices peaking in 2008 and a long period between 2011 and 2014 when prices were in a quite high level. However, the social upheavals in focus in this article occurred at a time when prices were not as high as at all other times. The reasons can be associated with some issues raised in this article. We briefly overview the country's energy policies and its historical background, proceeding with a contextualization to introduce the circumstances before the social upheavals. In this case, we utilize a broad source of information like news, expert articles, as well as the review of scientific literature. The core analysis consists basically of case studies in the light of the evolutionary methodology and behavioral economics insights, along with macroeconomic concepts and macroeconomic concepts and microeconomic indicators. In order to contextualize the country's particularities, some exploratory data were gathered related to demography, macroeconomics, transport use, and gasoline price variables. France, for instance, has one of the highest gasoline prices of the world, having a considerable fleet of light-duty vehicles. However, considering the high average income and the moderate gasoline individual consumption in France compared to other countries, gasoline is reasonably affordable, and only a tiny share of income is spent in fuel consumption. Brazil is a world leader in renewable energy, with predominant hydropower generation and a large share of biofuels in the energy matrix for transport, besides having huge oil reserves. Still, international fossil fuel prices dictate their domestic fuel prices, and acting together with heavy taxes, a volatile currency, and a high fuel consumption, represent a big chunk of Brazilian average income spent on fuel purchase. Mexico has been gradually reducing its fuel subsidies. Even though domestic prices are not among the highest in the world, low incomes and high individual consumption results in a large portion of income being devoted to filling up vehicles. Chile, for 3 decades, has resorted to price adjustment tools, including a self-adjusting tax that softens fuel price spikes for consumers. However, the policy could not avoid a turmoil related to energy prices. In India, low income and limited infrastructure denote a broad energy poverty condition. A liter of gasoline in India corresponds to almost 20% of the country's average daily income. Light-duty vehicles have not reached a wide penetration, and individual fuel consumption there is low, so the expensive fuels do not represent a large share of consumer expenditures. Let's start with the case studies. France in October 2018 faced the Yellow Vest movement, Gilets jaunes, a spontaneous movement that confronted 2 main elements that, from the manifestors' perspective, were connected: the consecutive increases in fuel prices and the tax on the energy sources, the TICP. The TICP is the mechanism utilized by the government to tax the consumption of fossil fuels, mainly gasoline, diesel, and natural gas. This tax has been gradually increasing since its creation. This continuous increase in tax on gasoline and diesel was intensified after 2004, when it incorporated an additional surcharge for carbon fuels. This tax was focused on accelerating the energy transition to fuels with a low carbon content. However, since the Yellow Vest movement came up, the government froze the continuous increase in this tax as a mechanism to halt the constant increase in gasoline and diesel prices. Between 2014 and 2017, the falling oil prices offset the increase in tax in fuels, but between 2017 and 2018, France's gasoline and diesel prices increased 11% and 19% respectively. The increasing international oil prices associated with a growing tax on fuels triggered a social movement against the progressive increase in prices that reduced the household's purchasing power. Biotto and Ryu demonstrated that the major impact on their purchasing power was derived from the increasing international oil prices and not the growing TP. The negative impact was mainly absorbed by households located in rural and small cities, given its higher dependence on fossil fuels for transport and heating. The most significant effect of decreasing household purchasing power is mainly absorbed by the poorest households. In Brazil, in 1953, a law defined as a monopoly of the Brazilian state the activities of oil refining and transportation of oil products produced in the country, and forms the national oil company Petrobras as the executor of this monopoly. In 1997, another law made more flexible the exclusive execution of the state monopoly by the company. However, the built assets remained owned by the company or its subsidiaries, which remain under state control, so that the market structure remained highly concentrated, with the national oil company holding 98% of refining capacity and a high participation in imports of oil products until 2016. From 2002, by law, the free pricing regime in Brazil applies to all segments of the fuel and oil products market: production, wholesale distribution, and retail. Between 2011 and 2014, domestic price was kept below the international price with an implicit objective delimited by the government, the major shareholder of Petrobras, to contain the inflationary pressure presented by the potential adjustment of the fuel prices. Between 2014 and 2016, oil prices fell sharply internationally due to the oversupply of oil in the international market. So the scenario was reversed and national prices start to be above international prices, giving rise to stronger imports by private companies. In October 2016, Petrobras announced the adoption of a new pricing policy for diesel and gasoline based on import parity, plus a risk remuneration margin on a monthly basis for readjustments. In June 2017, Petrobras revised the pricing policy with the goal of increasing the frequency of adjustments, allowing greater adherence of domestic prices to the international market in the short term. In July of the same year, the presidency of the Republic increased diesel federal tax rates, taking advantage of the scenario of falling external prices and with the objective of increasing the collection to meet the fiscal deficit targets. National average retail price of diesel increased at the moment 4.7%. In the second half of 2017, there was an agreement to cut OPEC production, and also the Hurricane Harvey in Texas that drove the diesel price quoted in the U.S. Gulf Coast by 35%. The national average retail price of high sulfur diesel in Brazil increased by 13.5% for the final consumer. In the following months, this price increased also 8%. And in May 2018, a large-scale strike occurred, led by the movement of autonomous truck drivers who protested against the frequent readjustments that led to the rise in fuel prices, among other elements that negatively impacted the category. The stoppage lasted 10 days and had nationwide coverage. Federal government negotiated with protesters, created an economic subsidy for diesel oil, reduced federal tax rates, and set minimum road freight parameters. This event politically pressured the federal government to take emergency measures, which included subsidizing temporarily diesel prices in an attempt to protect the freedom of companies in determining prices. In 2019, regulator determined disclosure of prices at refineries and terminals and insertion of pricing criteria in contracts between refineries and wholesale distributors. In Mexico, from 1938 to 2017, gasoline and diesel in Mexico had regulated retail prices and were sold under the Pemex brand, the national oil company. Between 2015 and 2016, the ministry set a national maximum price each month. And in December 2016, Mexican government announced the beginning of the process to deregulate gasoline prices. In January 2017, gasoline price increased by 20% and diesel prices spiked 16%, leading the country to turmoil. Demonstrations spread throughout Mexico during the following days. In March of the same year, price controls for retail gasoline and diesel began to be removed. In September, in order to reduce surge costs, the regulator began to publish prices for all Mexican gasoline stations on its website and through a smartphone app called Gaso app. In November, prices were officially liberalized nationwide. In December 2018, regulation issued by the Energy Regulatory Commission had forced Pemex to follow a set methodology in determining its wholesale prices. In parallel, the Finance Ministry varies the excise tax on gasoline each week. Changes in excise tax absorb approximately 90% of the weekly change in international gasoline prices. In December 2019, regulators decided to end the rule, which also required Pemex to post publicly its daily wholesale prices for all its distribution terminals. And in May 2021, last month, Mexico federal government enacted a reform of the hydrocarbons law, removing the legal basis for requirements over Pemex. In Chile, until 1973, oil industry was heavily regulated. The exploration, production, and refining of hydrocarbons by legal norm could only be carried out by the state through its national oil company, ENAP. In 1975, all the exclusive conditions of the state for refining were repealed, allowing any person or private company to operate facilities of this type in the country. In 1978, imports of oil and its products were liberalized. Legal barriers limiting the entry of new companies in the wholesale and retail sales of petroleum products were repealed. Chile has been a net importer of oil and its products, with almost the entire demand for the products being satisfied through imports. Between 1978 and 1982, free prices regime was introduced for all petroleum products in Chile. From 1991, Chile has implemented some sort of smoothing mechanism for prices, fuel prices. Initially, it was called Oil Price Stabilization Fund, or FEP. There was a mechanism that defined the percentage of increases in imported crude prices which should be passed to the public. The main motivation back then was the pressure on prices originated from the Gulf War. In July 2000, changes were made in FEP due to the decrease in available resources and their virtual exhaustion, derived from the increase in international oil prices. 5 years later, FEP was replaced by another fund, the FEPCO, created in response to the effects of Hurricane Katrina on gasoline prices, whose increases could not be limited by the predecessor fund. In 2010, FEPCO was replaced by a system called CITCO that, unlike the funds, was an instrument to guarantee that the wholesale price was within the band, were adjustments with adjustments in the specific fuel tax. In March 2012, Chilean government implemented a fuel price disclosure policy according to which all gas stations need to inform their prices within 15 minutes after the prices change at the pump. Between 2012 and 2014, improved price transparency induced higher margins and less price dispersion. But in August 2014, a fuel price stabilization mechanism, the MAPCO, was implemented to limit the weekly variation in wholesale fuel prices. And in July 2016, Chilean competition law was amended, implementing tougher punishments for collusive behavior. In 2019, an increase in subway ticket price triggered widespread protests in the country. And the subway transportation costs are linked to energy prices. In India, the government has been subsidizing the economy in two main sectors, food and energy. Petroleum sector is responsible for more than 30% of the total subsidies. In 2008, petroleum subsidies reached 3.4% of the India GDP, producing a major impact in the federal budget. India imports over than 70% of all its oil requirements. As affordable fuel prices increase the growing demand for fuels, deepening the oil external dependency and the current account deficit, the Indian government developed studies on the subsidy issue and planned a deregulation process. In June 2010, subsidies for gasoline were completely removed in a first test of the deregulation process. In September 2012, the regulation of diesel prices started. The main consumption of oil products in India are concentrated in kerosene and diesel. 2004, the reduction in diesel subsidies accelerated, seizing the opportunity created by the falling oil prices. In 2018, petroleum subsidies fell to 8% of whole expenses with subsidy. And when the international oil prices changed direction from falling to an increase, India observed the increase in prices in gasoline stations for the first time, and this element triggered a nationwide strike against the increase in fuel prices. So, as closing remarks, the analysis of these several countries' data following an evolutionary approach demonstrates a converging point among them. The increasing motor fuel price in these years neglected the redistributive effects of the measure associated with the affordability in the fuel price. Society incapacity in the short term to replace the hydrocarbons, mainly in the lower household revenues, due to previous investment in technologies which locked fuel consumption in hydrocarbons. Without any other policy to redistribute the revenue and to reduce the negative influences of the price increase in the household's purchasing power, the net effects have been demonstrating to be regressive. Other issues such as income redistribution impacts and fuel affordability have to be pondered in energy policy design and implementation. An improvement in the traditional cost-benefit analysis is the incorporation of the assessment of risks perceived by society as higher or more critical. Regarding the risks perception by society and threats emerging from economic policy or the political environment, sometimes social amplification may occur, being a result of the availability heuristic operating alongside social processes. On the macroeconomic perspective, developing countries such as Brazil, Mexico, Chile, and India often have volatile currencies, which jointly with oil dependency, as in the case of Chile and India, generates a perverse exposure to volatile oil prices. As an alternative, effective price smoothing mechanisms have been proven to be quite difficult to maintain over a long period of time because they frequently lead to or widen fiscal problems in the long run. State intervention on prices may also drive off private investments in domestic petroleum industry, which could help solving this dependency problem, thus generating a vicious circle. Developed countries also observed social reaction during periods of rising fuel prices, as the French case showed. Although the country has a high average income associated with affordable fuel prices, the disparity between regions exacerbated the redistributional effects from price increases. Additionally, the different households' dependency on fuels also increased the redistribution effects, reducing the purchasing power for the poorest families, households. So, thank you for your attention. Here's my contact in case you want to reach me out for further information on the theme. And I'm open for questions.
Thank you, Bruno, for your very interesting presentation. Now, I guess that there are several questions. I don't know who wants to start. Yes, first question.
Hello.
Hello.
Can you
Yeah,
hear me?
the floor is yours.
Yes,
Yes.
perfectly.
Thank you very much. This is Junko Gawa from the Institute of Energy Economics, Japan. So good evening from Tokyo. And thank you. Can you hear me? Is okay?
Yes,
Okay.
Yes, very well.
Yes.
Okay, and thank you very much for 3 presentations. All are very fascinating for me. And also I'd like to express my gratitude to Professor Lantz to moderate this session. Thank you very much. And my one comment and one question. The comment is that if you look at Indonesia, they also have a problem that they are facing, that the government try to remove subsidies, but every time they try to remove subsidy, that the people went to violence, that the people trying to against not to remove the subsidies. So that I think that it's good case study. It will be also good case study, because Indonesia is a big country in terms of the number of people, population. Also, Indonesia is a oil producing country. Even in oil producing country, that they have the same problem. So that maybe to include Indonesian case is maybe interesting to Bruno's research. And my question is that maybe it is not so important, but for me, this question is always in my mind, that it is clear that high energy price can reduce energy consumption by consumers, right? And there is a measure to rise energy price by putting price on carbon, like French tax named TICPE. Okay, and in the economic theory, the carbon pricing can reduce energy demand, also CO2 emission, by the so-called price effect. And my question goes to that: which factor, energy price or carbon price, people are more aware of? Like, for example, when people buy something at the store, do they decide to buy based on the high or low of carbon tax, or they do decide to buy goods based on the total retail price, not carbon price, but the total energy price? So that is my question, because in Japan, we have a discussion whether we should introduce carbon pricing, like a carbon tax. Like in France, you have already very high carbon tax. But if you look at the energy price, you know, Japan is a very energy poor country, and the energy price is already very high if you compare it with other OECD countries. So I always thinking that we have already very high energy price, and if we put additional price on energy, we cannot secure our international competitiveness. So I'm wondering which factor is the strong effect on people's behavior or companies' behavior? That is my question. Thank you very much.
Thank you for your comments and your question. Maybe in another study we could in fact consider the analysis of the Indonesia case. We chose to depict these countries because they have different backgrounds, but we had to limit the analysis in somehow. But thank you for the suggestion. And for the question, I didn't deepen this discussion in this article, but having heard of the other discussions, including in this conference, what I could say intuitively is that a carbon tax alone is not sufficient for driving the energy transition. Energy prices, fuel consumption is considerably inelastic to price. So it's not completely inelastic, but certainly prices have a role, but not to what extent it has a role. It's a matter of analysis. So carbon tax alone couldn't be, in my view, enough to drive an energy transition worldwide. Investments on different technologies, different pathways could lead the societies to unlock the consumption in certain fields. So the price incentives could, in fact, drive the substitution between the energy sources. Many options of alternative policies may have maybe more effective than only the consideration of a carbon tax on fuels. That's my vision.
Okay, thank you very much for your advice. And if you have any other articles or research paper, I would like to you to let me know. It will be very helpful my research.
Thank you. We can hold still contact by email if you want, and I can suggest some literature on this thing.
Oh, thank you very much. Yes, I would like to contact with you regarding pricing policies in developed countries. And I also would like to learn from French policy, climate change policy. And I think French is the first country that proposed border adjustment measures in EU country. I think the France is the first country to suggest the one. So Yes, I'm very keen on French climate change policy as well. Thank you very much.
Thank you. I don't know if there are other questions. So perhaps for me, question for Bruno. Did you test or did you try to assess the people reaction to oil price policy according to the situation of each of them? For instance, in the case of France, the reaction with the Gilets jaunes was definitively a reaction from people living in small towns, in which they say, you increase taxes on the gasoline price in order to substitute to some other transportation mode. However, in our small city, there is no other transportation mode. You can switch from one transportation mode to another in the main cities, but not in the small towns. And I don't know if you have done, and when you look at the sociology of people who complain, they are definitively not the same between the poorest and the richest. In fact, I was involved in some researches on the development of electric vehicle, and when we were working on this, we saw that we subsidize electric vehicle which were used by the richest people living around Paris. It was a real problem to continue such subsidies, which were not a good thing for the largest part of the population. I don't know, Bruno, if you try to see some different reaction according to the categories of people in the countries that you study.
Well, I couldn't deepen the analysis in one country specifically. The idea of the article was an introductory discussion and a comparative analysis between 5 countries. But I see it the same way. A carbon tax imposed nationally, federal carbon tax, is a simplest tool for the energy transition, and it has different consequences between regions, between income levels of the households, and energy infrastructure and alternatives like electric cars in the big cities, but not available in the small cities. So as I said before to Junko, taking solely the carbon tax nationwide, it couldn't be enough for driving the energy transition. Other aspects have to be taken in consideration in the policy analysis. This is the main idea of the article. Obviously, it's an introductory article, but the idea is exactly this one.
Thank you very much for your advice. Yes, in Japan, we already started to analyze the heterogeneous, how should I say, the characteristic, the household characteristic valley in different cities in Japan. Also, we try to understand the difference between the high income household and the low income household, how they react to the energy price. And we found that the energy elasticity is very low in lower income. So that if we introduce carbon tax, maybe the burden, price burden will be very big in lower income and household in suburb area. So that yes, if we consider about carbon price, we have to consider about those kind of characteristics as well. Thank you very much. Yeah, and so in France, the people who went to violence like yellow vest, the people are coming from the middle income household.
Mainly from middle income and the suburb. Generally, for those households, energy consumption stands for between 7 and 10% of their budget. When you consider for both transportation and heating, those are the two main energy consumption. And for people who are living downtown in the main cities, this is less than 5% of their revenue. That's why some people complain, and some people say it's not possible for us to substitute nowadays. Perhaps in the future we are for the ecology and the environment. However, it shouldn't be possible for us to substitute, and we are obliged to live far away from the center of the cities because the houses are too expensive. And you impose us some more taxation on the fuel consumption, of the automotive fuel consumption. That's why they complain a lot.
I see. So people who are in middle income household try to against the government policies, but how about the people in like people in higher income household? Do they still are they thinking that they are they try not to act, but they are thinking like you?
Yeah, they were thinking that the people who complain make sense. And in fact, in terms of microeconomic, there is a willingness to pay, and at €1.5 per liter, this was the upper willingness to pay for automotive fuel, I guess.
In Japan, yes, we are we are same, and yes, also the yellow vest is very. We are very surprised to know that many TV news and Japanese newspaper trying to make the article about yellow vest. Even in France, where is the very sophisticated country, have those kind of violence is kind of very surprising for Japanese people.
No, in fact, we had the same thing, but it could be during the French Revolution in 1789, because one of the motivations of the French Revolution was the price of the bread, the price of wheat, and people complained because the price were very high and asked for a regulation of the price, and the king didn't want to regulate the price. That's why there were this revolution.
Oh, thank you very much. Yeah, I learned a lot from this session, and I really would like to thank you very much for sharing information, very hot information, real information. Thank you very much.
Thank you, Bruno. I don't know if you want to say a little bit more on your paper, on your research.
No.
No, okay, that's fine.
Thank you.
Okay, thank you. Also, if there is no other question, now it's time to close this session. It was a pleasure for me to moderate all this co-discussion, were very interesting. You will find all the papers on the website of the IAEE, as well as the record of this session. I guess that you will receive in a couple of days all the indications to find all these sessions. Also, wherever you are along the Pacific Ocean or the Atlantic Ocean, or wherever you are, I wish you a good day or a good night for those who will finish the day, and hope to see you for the next session tomorrow.
Thank you, everyone. And I'll stop recording. Have a nice evening and have a nice day too.
Thank you for your attention. Bye-bye, everyone.
Okay,
Bye.
bye-bye.
Bye-bye.
Bye.
Au revoir.